The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look at the German DAX like we usually do, also the FTSE. You can notice that they are also in a topping type pattern. That is very similar to many of the indices over in Europe. So it's going to be interesting to see how the new year unfolds. But before we get to that, we have something very important to share with you folks. Let's just get it up here to take a look at it. This is from our good friend Norman. He calls it to the minute Winsky. If you'll take a look at this, folks, this is the Jupiter-Saturn conjunction. Those are little white dots that you see up in the sky. And this is where they're right at 0 degrees and getting ready to start their 20-year trip around the sun. Anyway, if you'll keep an eye on that, that's really going to be a big one. The reason why that's important and why I bring it up, folks, if you look up in the sky at night, you can see a lot of different stuff. And if you remember from the Bible, it said, that the three wise men were looking for the star to guide them to the Christ child. And if you looked at ephemeris back in 2000, in 0 BC, you'd have to see what was in the sky at that time, and that would have been a Mercury, Venus, and Mars conjunction, all three of them lined up together, which would have been extremely bright in the sky. That happened in October of the year 0, and that happened to be at the time when the Jewish people were collecting taxes, and that's what Joseph and Mary were there for, were to pay their taxes, and that's why they believe that Christ was born in October, and probably not, was not born in December like we have it as Christmas Day, December 25th. That's my 2 cents worth, and I'm sticking to it. Don't know anything about it. Someone brought that to my attention. I'm sticking with December 25th. That's all I can tell you. Nothing more, nothing less. A couple patterns of interest. We had a really nice one today from a nice young man over on the eastern part of the United States. Had a really nice pattern here in the Australian dollar using a 15-minute chart. This is with the CME futures. As you can see here, you had a perfect 61% retracement up there at 76.28. If you'll notice from the bottom where you have the A leg to the top of the B leg, if you count the number of bars up, you'll see that it's 12. If you count the number of bars from the D leg to the top is 12 bars. So you have perfect symmetry at that time. So you don't have to wait for any oscillators or anything like that. You just assume that that pattern is going to hold. You sell it there and you put your risk in, which is about 20 pips. Now, the reason why I focused on this morning, folks, is those of you that have not traded foreign exchange before, I highly recommend that you go to Chicago Mercantile Exchange and do your trading. You can trade the others at another. Ouch, those things hurt when you bring that up. Okay, okay, Gator, I got that. That's a big 10-4. Anyway, the difference between trading at the Chicago Mercantile Exchange versus the foreign exchange brokers that are out there, FXCM and all the others. The CME is an actual contract. It's a valid contract. With the Forex people, you're actually trading against that bank. And they're going to charge you, like on the euro, they charge you 1 or 2 pips. Well, 1 pip is $12 and 2 pips is $25. Well, you can trade that CME contract for about $3 or $4 in and out. In other words, $2 in, $2 out. And so that saves you a lot of money. If you're trading just 20 times a month, you're going to save, $300-400, and that's a lot of pocket change. So remember, that's a good way to do it. Plus, they have the micro futures there. Well, they have the micro futures at the other place too. But it's very important, I think, to do that. Hey, that's my 2 cents worth. So we'll see. Okay, another pattern, very interesting here today. Let's take a look here at the most active stock in the world that almost everybody owns, and that is the, hold on one second here, we'll get this up here. You'll see here that we've got the Apple went up and made a 1.618 expansion, folks. If you did an hourly chart on this, you'll see that that's the ABCD pattern. Starting way back in late November, early December, the ABCD measures up there to 129.60. That's where I think we're trading at roughly 129, and we should get at least a correction. This is for short term, of course, but you can see we should at least get a correction down to the 126 level. Now we have options expiration today, folks, and that being on a Friday like this is going to be really, it's always on a Friday, by the way, it's going to be really, really hard for the market to make any type of a really big move until, you get out of this options things, which will be on Monday, and then we have Christmas week, and that's going to be tough. And I have a Christmas present for everyone. Do not miss Monday's show, folks. From Vienna, Austria, we will have none other than William Meridian. Bill Meridian will be on, and he'll be giving us some more of his cycle stuff, which has been very, very good, and we want to pay close attention to it. Now, here's a pattern from last night. Someone sent this to me here. It was this is the Russell index. Very, very, probably the second best to trade after the S&P 500, the NASDAQ being next, and the Dow Jones being the third. That's because of the open interest. But you'll notice you have the three peaks in a domed house. This was a pattern that was done by George Lindsay. Jerry Favors out of Columbus, Ohio, made his whole career was based on this pattern. He was a master at it. He was really good. Frank Tauscher, really respected Jerry's work, as did I. And I had Jerry and his lovely wife, Leslie, come out to Pismo Beach and spend a week with us. And he was there at the time of Rich Anderson and also Mark Douglas staying at the old trading house. And Jerry's wife, Leslie, is a flat-out dead ringer for Halle Berry. And it was about 9:30 in the morning, and she wanted to go down to the beach to go sunbathing and swimming, and she came down in this bikini, and I tell you, it messed up trading for the rest of the day. Anyway, it's a really, really nice guy, and the problem is he smoked like 4 or 5 packs of cigarettes a day, and he passed away, oh my gosh, at the age of about 38 or 39. He was really young, and but a really nice guy. I hated to lose something like that. And speaking of losing someone, we did lose David Weiss. Those of you that have ever, done anything with the Wyckoff stuff, you'll notice that David was. Yes, that was he died right after that. Z. It was right after. I think he died in 90. Must have been 91 or 92 that he passed away, but he's a nice, really nice fellow. Anyway, you'll see this is the Wyckoff stuff. Very good. Folks, if you're interested in Wyckoff, save some time and money and look at Mr. Basil Chapman. His stuff is, I think, is actually easier to interpret than the Wyckoff, and is certainly very, very valuable. So I would go with Basil Chapman. Anyway, we'll be right back. I'll talk a little bit more. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, this is Tom O'Brien. Do you have broken or unwanted jewelry, diamonds, watches, coins, silverware, and other collectibles that you would like to turn into cash? Tiger Precious Metals and Stones will pay fair market value. We make it easy to turn your precious metals that are sitting around in your house into cash. Call Andy now at 727-329-8245 and he will walk you through our safe and secure process. Andy has been in the business buying and selling precious metals for over 15 years. Call Andy now at 727-329-8245.
TFNN has just launched our Tiger Dollar Holiday Sale. For a limited time, we've doubled all the Tiger Dollar bonuses, where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good for all TFNN newsletters, webinars, and services and never expire. Whether you're a current subscriber or just thinking of signing up for any TFNN products in the future, this is a great time to get your Tiger Dollars. Happy holidays from all of us at TFNN.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks. Some folks have put the YouTube thing of the Saturn and Jupiter conjunction in there, so it's pretty interesting to if you like to see this stuff. Folks, if you ever come to Tucson, Arizona, you really need to go out to Mount Wilson, where we have the big observatory there. I don't know if you know this or not, but the University of Arizona is the home of quite a few of the astronauts. They have a big aviation university there. In fact, the new Senator Mark Kelly is part of that, I believe. But if you'll come out there, you'll be able to see it. It's really funny, folks. I've been here for I've been here for 26 years, and I've had about yes, it's Kitt Peak. That's what they call it. That's where Mount Wilson is. If you will take a tour out here, you'll be able to see it. I've had about probably 10 people that I've trained to be traders have moved out here. Mark Douglas, of course, he came just because he liked the place and we were good friends. And no, I hike up to Mount Lemmon about 3 days a week, up to 10,000 feet and back. I like to do that heavy rock climbing. But anyway, we've had some nice folks here that moved here to Tucson. Some of them have stayed, some of them haven't, and we can do that. We can show a few sections of that video that Mr. Z sent at the break. Yeah, absolutely. Not a problem. That's very good. Okay, let's move on here to just a quick second here to take a look at what these markets are doing. We're up to, we got to 3720 right now in the E-mini S&P. Watch it this morning, folks, because there's going to be a lot of resistance just from a technical basis between 3720 and the 3726, I believe. The old high was 3724. So keep a close eye on that one. Be very interesting to watch it. And another one that is super interesting is the crude oil right now, where it's trading at 48.92 to 4900. That's going to be very, very interesting. So those are the type of trades that you set up where you don't have to risk very much at all. And that's the real key to what we're looking at. Okay, we're still looking at the Wyckoff chart, and the reason why the Wyckoff chart is still there is I wanted to show you, if you'll notice those red lines, the fact that the way that Wyckoff did that, he used the closing prices. He used bar charts, because back in those days, you're talking about the 20s and 30s, they weren't exposed to candlesticks. And so that's why they use the bar charts. Bar charts are actually better to use for two reasons. One, if you print out the chart, your printing costs are going to go way down. They're also easier to see the opening price, which is good. But because I count bars, I use the Japanese candlesticks just because it's easier for me to count bars, and I'm in the habit of doing it. But that's my style. I mean, I don't necessarily do anything more different than anybody else. So we'll watch it. One of the I sent out two videos last night, folks. The first ones didn't have any sound. For some reason, my speakers were not working right, and I had to resend them, the same one, but I resent them last night and early this morning. And these are mainly because of the dollar index. We're at a real critical level here. The euro's got to get above 123 very, very quickly. And the pound is acting very, very poorly of all those. And, of course, there is a chance here, just from looking at some really tight formations here that we're seeing in the U.S. dollar index, that we would be watching a potential for a little rally here in the dollar index. It's still very bearish to the downside, but it's very, very oversold. So we should get some type of a bounce in here. Now, there's a lot of work to be done over the weekend on the currencies, folks, because usually at the end of the year, beginning of the year, there's big things happening, and I have to do a lot of weekly stuff. I've got to expand it to all the five of the big six, and we have to look at all those. I'll put those into the newsletter this week so we can take a really good look at them, and we'll be able to see how they line up. So those are some of the things that we've got to get done here. And these stocks are not going to go up forever. I mean, they probably will. But there might be a day where you have a down day, because we have the options today. It might not be today, but there will be one someday, that's for sure. We got a caller from Ohio. Jim, what can we help you with?
Yeah, hey, it's Tim, but I'm in Ohio here.
Okay, well, they've got it showing me as Jim, Tim, so whatever we've got.
Listen, you're the one that got me onto the CME and looking at these changes in the values of the S&P and the like. And today it's pretty dramatic, the change from yesterday to today. I don't know if you saw that, but I was just wondering if you read anything into that.
No, I haven't, but it's mostly due to options expiration. The boys options are about 6 times bigger than the volume, or more than that actually, than the futures, and so they're in there with playing their games most probably, okay. And that's usually what's doing it, because of options expiration. It used to be a lot worse than it is right now, but now it's still active, but that's most probably. That's why I tried to warn folks today that this was options expiration. In fact, when I chatted with Shane this morning, he reminded me also to do that. But when we have options expiration, which is usually the third Thursday, the fourth Friday of the month, you have a third Friday of the month, you have a pretty good idea of what's going to happen, with volatility. But the real volatility, Timmy, is going to have right after the first of the year. We're going to see they're going to have the bands playing on that one. We had to be ready for that one.
Okay, so if I hear what you're saying, then pretty much on options Friday, the CME values, you kind of grain of salt type of attitude with that.
Yeah, it's well, for the futures, it's a sort of a grain of salt. But if you're in options, this is where they'll manipulate those prices, and that's you got to be really careful. If you got a chance to book a nice profit on the 18th, the third Friday of the month, early in the morning, I would certainly do that, because they'll bring those spreads in really quickly if they get into trouble. Tim, I don't know if you know this or not, but on the big crash day, October the 19th of 1987, I mean, the spreads on those options were $20,000, and they wouldn't even fill you if you were down there. No one would take the other side of the trade. It wasn't until 2 days later, when the market had rallied, 400 or 500 Dow points, that they started taking those spreads off, and that was. Those guys were stuck so bad they had no choice. And then when the Fed came in with their plunge protection team, that bailed them out. But there was no way they were going to take a $20,000 or $30,000 loss on an options contract. And so you have to figure that in when you're trading options. Tim, I hope you're an option seller, because that's where the money is. You don't want to buy options. The odds of winning on buying an option is very, very poor. It's around 85 or 90% chance you're going to lose. But if you're selling an option, that reverses, and it gives you an 80 to 90% chance of winning. So I hope that's what you're doing.
Well, hey, I'm kind of beginning in the options whole field, so I appreciate that hot tip there. Appreciate it.
Okay, well, study as much as you can, because Larry McMillan's got some great stuff on options, and the folks here at TD Ameritrade, I think they still have an options program here at TFNN. I don't know. Hey, thanks, Tim. Merry Christmas to you. Happy New Year.
Merry Christmas to you, too. Thank you.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, let's get back to business here. Someone asked a question about the movie Trading Places and where I saw it the first time. Strange question, but it was 1983 when it first came out. It was in the fall. It was very late on November, December. It might have been the Christmas movie. I'm not sure, but it was at the Water Tower in Chicago, and Byron and I went there and we saw the movie. It was like at about the 2 o'clock showing right after we got out of the trading. We went directly over to watch it. We liked it so much we watched it for 3 times straight through. And it was really fun. We were supposed to have dinner with Dean, Frank, and Sammy that day at Morton's Steakhouse there in Chicago. By the way, that was Frank O'Neill, Dean Clark, and Sammy Kaminsky. Those were the 3 guys. That wasn't the Dino, or Frank Sinatra. No, it was these other Dinos. Anyway, we were definitely enjoyed it very, very much. And I've seen the movie probably 50, 60 times. I know all the actors and stuff, and it's I don't know them personally, but I know who they are. I just love that movie. It's one of my favorites, along with Let It Ride with Richard Dreyfuss, and then of course Where Eagles Dare and my Kelly's Heroes. Those are my favorites that I usually watch with my grandson when he was little. Anyway, let's move on here to Tesla. We've had lots of chatter today. They're putting into the S&P. Remember, folks, Tesla is a data company. They are not an automobile company. And as you can see here, we had that little bit of a 382 pullback almost to the exact tick there at 338. And from there, we are setting up to see Tesla. We're only $100 away, folks. The price objective is 785, and that's the 1.618 expansion. That doesn't mean it necessarily is going to stop there. It just means that that's the process, the ABCD pattern of this long-term ABCD for the whole year. That's the yearly range, and so that's got a really high probability of getting there. $100 in a stock like this, that's what, a 12% move. That's nothing. That thing can really jump around quite a bit, very good, that's it. Yes, Mr. Z is from Philly, and they talk about they've got that, is it Rittenhouse Square is where where he was taking his little skateboard when the movie started. But I think there's a place called, there's a bar there. I can't remember the name of that bar that's there. Oh shucks, I can't remember. But I went there once, and it was nice, but it wasn't what I really thought it was going to be. Anyway, Philly's a great place. Unfortunately, it's having a lot of trouble with weather today. I think they got about 9 inches of snow. They sent pictures of the grandkids, and that's the bad part of this virus. We haven't seen them the whole year, folks. And believe me, we spend 3 months with those kids, and it's been very, very sad. Missing all of our friends down in Florida, down there in Longboat Key, those of you that happen to know that place, which is really pretty nice. Okay, all right, let's move on. By the way, folks, those of you that are thinking about coming into the Tiger Den, if you do get a chance, I mean, we should have a salutatory party for Mr. Z, John Chaney, and the service that he has for TFNN. I mean, he posts these charts in his trades, and he has had one of the most spectacular years of trading I have ever seen. And folks, I've seen a lot. He's been on the long side of the grains. He's pushed copper all the way, to the limits, and that's a heck of a deal. And speaking of copper, we want to cover that one next, because we did make a new high in copper this week. We took out the high that I was looking for, which was at 362. We got up to 364. Today we're now trading at 362. But if you look at this, this is the long-term daily chart on copper. And as Rich Anderson always talks about Dr. Copper, you'll notice how it follows along with the price of the stocks. The blue line is the S&P 500, and the correlation on this, folks, is very high. It's to the tune of about 80%. So pay close attention, because this might have some meaning of what's going on in the markets. But whether he does or not, I really don't know. So the main thing is to protect yourself. do not risk any more than you absolutely have to, and you'll be far, far better off. In fact, Mr. Z posted, in fact, he just posted one about how he reduces his risk. And when he's wrong, he takes that small loss and moves on. And the grains are on fire. That's another one that I have to cover this weekend. I mean, I got a lot of work to do this weekend because we're having some big moves now out of these old highs in corn, and also not quite yet in wheat, but it's right behind them. And we've had bean oil moving good, and we've had meal moving good, and also the soybeans moving good. So there's demand coming in from China. Mainly that's the big one, but they're also having trouble with the weather down in South America, in Argentina and Brazil. So we have to pay close attention to what's going to happen to that stuff coming in to 2020. Folks, you know, I've been doing this for a long time. I'm into the 8th furlong right now. And by golly, you know what? I get more excited about this coming year than any year I've seen in a long time. I mean, I really do. I mean, and I don't care whether it's a top or a bottom. And we're just starting to see some really, really good, volatility. We look at the volatility in copper. It goes from 190 to 360. So we're having some great volatility in some of this stuff. Gold, silver, all of them. And this is what pattern recognition is all about, and that's why we're going to have what I think are some really great things. Remember, Monday we will have Bill Meridian on for a special show, and he is finally back. I will cover natural gas. As Marshall knows, it's one of my if anybody should be able to cover natural gas, it should be me. So give me 1 second here, Mr. Marshall, and we are moving good. There's what we want to see. Let's just blow this up here to show you I want to show you the 382 retracement. Gosh darn, it doesn't show it. All it shows here is the 60% retracement from the 11th. That happened yesterday. That was on the air. We were watching that on the air because we had that ABCD coming in at the 60% level. We're getting ready. Let's get the daily up here because that's the easiest one to see here, folks. We're breaking out here. We sent out a couple of charts on this yesterday early. But you'll notice here that we're breaking out of the upside here. We've had that 382 pullback there at 259. We're now trading at 271. We're going to make at least the 282 level, which is a 61% retracement. So this one looks pretty good. Look at the bottom down there, folks. I mean, that was a no-brainer. You got a 3 drive to a bottoms. I mean, just absolutely perfect. And you have a 61% retracement. And if you measure the distance, just like we did in that Australian dollar that the gentleman from back east was showing us, you'll see that you count the number of bars down, and bada bing, bada boom, you're looking at the same thing. You're looking at price and time coming together, and that's why it's a really good thing to be looking at. So pay very close attention to it. And just on the Christmas, since Santa's in a good mood today, Santa, bear with us today. And remember, sometimes Santa leaves presents on the table that don't have anything in them. And this might be one of those times, but we're going to pull the sleigh up to the old barn and let you take a look at one. We're going to open that present and see if it's going to be worth anything at 3709 here in the S&P.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi folks, this is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold or silver coins too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has just launched our Tiger Dollar Holiday Sale. For a limited time, we've doubled all the Tiger Dollar bonuses, where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good for all TFNN newsletters, webinars, and services and never expire. Whether you're a current subscriber or just thinking of signing up for any TFNN products in the future, this is a great time to get your Tiger Dollars. Happy holidays from all of us at TFNN.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, getting back to the old Christmas spirit, try to do as much as you can this year because folks really, it's a lot tougher this year than most years. So even in Tucson here, which is really pretty nice area, but we have a lot of trouble. And, the churches are helping out quite a bit. So if you can, be able to do it. Fortunately, Miss Sarah is really, really good at that, and we're going to be able to help out. I've always been, interested in Christmas. It was my mom's favorite holiday of the year. And my children, believe it or not, when they were 8 and 9, they decided not to get but one present a year at Christmas time. And the reason why is they just wanted to give back to the poor folks that didn't have what we did, and the kids are still doing that. That makes me feel, very good at the fact that to do that, because my kids had Christmas 365 days a year. So it's pretty good. So let's take oh my goodness, what's going on here? Is that Santa in the line? We have a caller, Shane Smolian. Are you there?
Oh.
My gosh, it's Shane. What do you know about the Fed? Are they in the business of trading during these last days of December?
Oh.
Okay, Santa. Is that you? Go ahead.
Well, I thought we'd talk a little bit about the Fed here, just a little bit. There was some information that I didn't quite get to in the last show, so let's do it now. The Fed's continuing these wild gyrations in the juice. They're in the middle of a pullback right now, and so this is a strange time because you've got these seasonals, right? And like today is option expiration day. Usually the market trades in this tight range. So it's a strange situation. You've got a lot of sell signals stacking up, but you've got this hot positive holiday. So that's what's going on right now. Yeah, they are active, and when there's light volume, they can affect the market a lot more easily. So you can see here, this is the S&P chart here, and we do have a lot of sell activity coming in terms of the signals with the Fed juice, the planetary speed index, the dollar juice is actually back into a sell, and so. Yeah, you've got this strange situation where it's just kind of levitating out there, but yet you have all these sell signals pushing down. So it's very possible that it may kind of drift down and then kind of hold next week. And then after that, maybe you have more potential for selling. It's possible after that. But the more we go sideways here and it doesn't sell off, the more it weakens the selling possibility. So the dollar juice here did go into a sell also on the S&P. So you've got, again, you just got a strange situation where you have a lot of sell signals. Even the Fed is pulling back, but yet the market is just kind of levitating here. So we may be looking at these seasonals. Can I talk about gold for a second?
Please do. Yes, we always have an interest in gold. Go right ahead, my friend.
Okay, so gold is an interesting topic here. We have we're really approaching an annual low. So we're coming up into this annual low on gold, and the Fed juice has stayed in a sell here. You can see the Fed juice has stayed in this sell, and so we are coming into this low. It's right around Monday, right near that Jupiter-Saturn conjunction. So I do have this still in a sell. I have it in a sell on the Fed juice, and I also have it in a sell on the dollar juice, which is the next chart here. So, and dollar juice, by the way, this is a fresh signal. This is coming in today. This hasn't even been posted yet. I can post the dollar juice in the morning because I don't need to collect Fed data for that. So I can confirm that the dollar juice is also going to be in a sell. So it's possible that we're bumping up to some short-term resistance here in gold, and then it could be pulling back. But we are getting dangerously close to that annual low, and it's possible it already made the low back in early December. But I do think it might pull back a little bit. I'm expecting a possibility of a pullback into Monday, and then it could take off. If you look at these RSI values, I do like to look at these just because there are certain points that are sensitive. So gold likes to turn in recent history. Gold has been turning right around 75. So you can see that. So it hit 76 yesterday. So it's possible that it's coming into some type of a short-term high, short-term pullback. But again, the confusing factor here is the holiday. And I'm going to show you here. This is a solar cycle here. This is an annual. And this tends to be, like I said, this is coming into a very important annual low here right around the 21st. And again, that's right with the Jupiter-Saturn conjunction. So, maybe it's making a lower leg, a higher leg to take off here. It's possible, with all of this monetary policy going on, with the stimulus, that is highly inflationary for these markets. So you're starting to see it across multiple markets. I mean, all these markets are just taking off in anticipation of the stimulus. So the reason, that's another reason why we're getting this float here. The S&P is floating, copper is floating, all these commodities are floating because the stimulus is destroying the dollar. And the more we destroy the dollar, the more you get inflationary pressures on these markets. So it's kind of a strange situation between the stimulus, the holidays. Those are both bullish on all commodities. But yet you have these sell signals coming in too. So, but big picture here on gold, you're definitely pushing into some type of a low here. Now, Bitcoin, it's past its annual peak. So this is one of the things I want to talk about with people, that Bitcoin is very good about following its solar cycle because it's relatively young in terms of its lifespan. So even though it did push higher and it is pushing up into these new highs right now, we have passed the annual peak. So it's possible that, it could still keep going higher or lateral. But I just want to point this out that, everybody's talking about Bitcoin right now, but we have actually hit the actual peak of the year in terms of the solar cycle. This is a chart here that I put up for the subscribers, and this is dealing with Bitcoin. Okay, so we track Bitcoin, and so I just want to point out to everybody, we have statistical days where the market does different things on different days, and so this is one of the things we track. The only weekday for Bitcoin is Friday. You can see that it's in recent history that it's been really just pushing up almost every single day. Thursday is actually the strongest day of the week statistically for Bitcoin. And so, we're into this Friday today, so it is kind of stalling out here. But the one thing that I just want to point out is we did pass that solar peak. And then down here we have the Alpha Omega cycle, which is the new cycle. So I put these on the charts like this every day so everybody can see them. But you can see that we had Tuesday and Wednesday were definitely positive, and so Thursday, Friday is negative. So we have, if you look at the Alpha Omega down here, Friday is negative along with the daily statistics. So again, we would expect today to be in some type of a stall pattern on Bitcoin, but it's in such a bullish mode right now that pretty much if you get any type of a stall, you're lucky.
Shane, I got a question here. They don't allow short selling on these things, do they? Because they don't have borrowed coins. I don't believe, do they?
Well, this is the futures. So the futures.
Futures you can short. Yeah. Okay. All right. All right.
Future. Correct. And this is one of the reasons why it's so hard to get data on this. A lot of these cryptos, I have to download this by hand. It's tough. It's tough to get this data. So this is why the Fed use. I only have the Fed use on Bitcoin right now, but it's done a great job. If you look back, it was long from October the 9th back here all the way up to December the 6th.
Hey, listen, thanks for joining us, Shane, and we'll have you back probably right after the first of the year, my friend, and enjoy the holidays with your lovely family.
Merry Christmas, everybody.
Okay, we'll be right back, folks.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and it looks like that three peaks in a domed house that we looked at in the Russell is doing pretty good, and also the Australian dollar is doing quite well. as I understand it. I'm not following it, but someone just Skyped me saying it was doing pretty good, so that's a good idea. All right, let's move on here. We've only got a few more minutes. We'll have Bill Meridian on next week, and we'll be able to talk to him about some of the things that are going on over in Austria. He's finally home after I think he's been here 4 or 5 months here at his home in New York, and it's going to be glad to hear him back at home with he and Surya in their beautiful place there in Vienna. So we will have him on. Pay close attention to the dollar index, folks, because it does have a chance to bottom in here. It's very, it could be a short-term bottom, it could be a long-term bottom. All I know is a low-risk bottom. That's all I'm saying. So we got a lot of work to do over the weekend, especially with the grains. We got to do a lot of work on the currencies because those are really important to watch the big five coming into the 2021. 2021, folks, will set records as far as volatility. I'm 99 Ivory Soap. 99.9% sure that we're going to have probably one of the best years for volatility. And we've had a heck of a year in 2020, but I think this one will even beat it. I mean, that's just the way it's set up to do. So we'll see whether that happens or not. Go out into the night sky if you get a chance and take a look at that Jupiter-Saturn conjunction. This will be the last time I ever get to see it because it ain't coming again till 20 years. And there's no way I'm going to make the century mark. So go out and take a look at it. It's really quite beautiful. I don't know if Apple has held the 129 level, but it should back off to at least 126. That's what it says from the cheap seats here well, they're not so cheap anymore here in Tucson, Arizona. If we'll be able to take a look at it. And, by the way, folks, thank TFNN for all the stuff that they do, folks. None of this would be available to us without Tommy and Tommy O'Brien putting it all together. We got all these great subscribers and all the people in there. Shut the front door. It's a good deal. We'll see you all on Monday, folks. May God bless.